Welcome to the Daily Update. This is Being Prepared Tuesday, July 12th, where we'll look at the action in the market today and then see how things look for Wednesday, July 13th. And this will probably be a little bit of a rushed video. I was doing some other things and I had just enough time to make a short recording of this, so I hope you find this helpful. Just to let you know, I do have a temporary email address. So if you are used to emailing me at john@spxinvesting.com, don't do that until I tell you different. It's now spxinvesting@gmail.com. And also I want to tell you that on Wednesday, July 20th, 1 week from now, I will not be able to do a video. I have some other commitments and the time just won't allow me to do a video that day. All right, let's go back. It was a negative day. We had a gap lower at the open down to S1, which was at 38.44. Again, it looked like maybe we were going to try to do something, but no. Prices then rebounded up to the daily pivot, which was at 38.61, which now acted as resistance. We couldn't break through the daily pivot. Prices then ended up falling below S1 and down to S2 at 38.27 and to just above 3,800. So we're kind of dancing with that psychological 3,800 level. Again, prices then rebounded slightly as the day went on, but we ended up being down 0.92%. Pretty disappointing. We were below average on volume. The technicals, they're switching back more negative. You have a day like we had on Monday and Tuesday, and that takes a lot of the wind out of the sail for things looking more positive. Now, it doesn't mean they're off the table. It's just things aren't really setting up as positive as they were. We have inflation, interest rates, growth concerns, and a lot of that should be answered on Wednesday. We have the CPI coming out. That's the big thing. That's what the markets have been waiting for. The whole list of geopolitical concerns, really no earnings that are that big of a deal right now. And then the recession fears. Most of what everybody's talking about has to do with either being in a recession now or going into a recession. So what are some things? Are we seeing a sell the rumor, buy the news type of scenario with the CPI? We had a down day on Monday, a down day on Tuesday. We had some positive setups underneath the surface that are still there, but not looking as strong as they were. Is the market going to find a way to rally after the CPI comes out? Just a thought. Not predicting that, not saying that's what will happen, but we do see that a lot. We see the reverse of that, where a price will run up as the rumor is getting ready to be unleashed. And then especially with earnings reports, with individual stocks, and then it could be just a stellar report, but then the stock ends up selling off. Are we seeing the inverse of that? Because it does happen sometimes. And then the markets are very nervous ahead of the CPI release, which is coming out on Wednesday. The ADX is still below 20. It's in the 19s, but it's still below. Oil really fell. We're down below 95 right now, or in the 95 range. The 10 to the 5 and the 10 to the 2, they remain inverted as far as the yield curves. Fear is getting back to extreme. We're right on the border between fear and very fear. I know that's not a word. We had the NFIB Small Business Optimism report that came out, and it showed the lowest reading since 2013. Whoopee. It was at 93.1 last time. It came in at 89.5. So you even have small businesses being rather pessimistic about what's happening. We're not trending right now because the ADX is below 20. We're negative with the bias, and we're mixed to negative with really more of a negative slant right now with the momentum. Let's go back and look at the day's session. Here we are at 26 right now. We're right on the borderline, so to speak. We're potentially coming back down into extreme fear territory. Here's some Isabel net charts where you see most of these diamonds or little boxes here. They're on the left, and that means most folks are favoring risk off type of positions, meaning out of the stock market into specifically bonds. And you don't have a lot of folks over on the right-hand side that are really favoring stocks at the present time. This is just suggesting that where are we at right now? It says many metrics are not yet at bear market bottoms. The PE ratio over here on the left, this is what we are currently. We're at about 18 according to this chart. Usually at bear market bottoms, we get down about 11 or 12. CPI is up over 8%. Usually we get down around to 3% or so. Unemployment, we'll typically see this go up. Unemployment's very low right now, where we usually see it up around close to 6%. We're at 3.6 right now. And then the high yield spreads. These are the risky versus non-risky spreads. Those are pretty low right now. They've been hanging in there, but usually we see them much higher, up at over 12% usually. This is bear market evaluation. Average monthly losses have not been that severe, right about in the middle. This is where we're at right now. And it might be a little hard to see that. The median is one step over, and the average is way down here. So it just shows that in the scheme of things, there might be more room to go, or if you want to look at it a different way, we're not necessarily down as much as the average or even the median price is suggesting. But that's as of June 30th. I showed this in yesterday's video with Goldman Sachs. They came out with a new chart revising their GDP, where in the first quarter, they have us down 1.6. They really brought the numbers down for the second quarter to 0.7, but they're still positive overall with 1.8 and 0.8 for the rest of the year. So they're not necessarily suggesting that we're going to go into a recession, at least yet. This chart shows that we're way up here at the top currently when we're looking at the price growth to profit growth, way up here. You notice most of the dots are much further down this line, which could suggest that there's more room to fall on a valuation basis. Then we're looking at the rotation from inflation to deflation assets. It's really been coming down, but now we're starting to turn back up. This is the biotech ETF, and some of you might be really into that, where it had been really underperforming, but then energy has been outperforming. So that's why this ratio is going down. But is it starting to turn back up with biotech looking like it's getting a rebound right now? Looking at the euro, which is just continuing to sink lower as I record this, the Goldman Sachs is saying, yeah, we're going to get down to about 102. And then from that, we're going to bounce back up to 105, 110, 115. So they're bullish basically on the euro against the dollar. Let's look at the VIX, where we did see an advance with the line chart and the bar chart. We're seeing the VIX of the VIX also starting to pick up just a little bit, showing volatility is increasing as we continue to go down. Here's the Ulcer Index, which is not picking up a lot of fear right now. Again, as I said in yesterday's video, you might want to look at the weekly chart of the Ulcer Index. That looks to be a little more in line with what we're going through right now. We're down 20.75% from the all-time high. The equity put call ratio did advance on a down day, which is not surprising. And we're starting to turn back up with the 5-period moving average. And I need to cough. Sorry about that. And I'm just not able to edit things right now. Copper continues to decline. That does not bode well for the economy, since it tends to lead the economy. With it going down, that might suggest the economy is going to get even weaker into the future. Here's the copper gold ratio, which continues to fall because gold is having trouble as well. And here's the spread between the 2-year yield and the copper gold ratio. They're very far apart. Here's some support and resistance. Here are the daily pivots for Wednesday. And we might really get rip-roaring, or it could be a non-event. We never really know when markets have great anticipation of a report and then it comes out and it doesn't really settle anything. If that's what ends up happening, then the markets could just kind of flounder a bit. Here's the daily chart showing that we're still down below this pivot level, and volume, even though it picked up slightly, is still below average. Here's our machine gun chart showing that we're starting to break down below this longer term support. And here's the same chart also showing that we're just about on that pivot point right now, but we dropped just a little bit below that. That could be negative. Here's our daily chart showing the pivot points for July, and we're coming right down to the pivot level now where we had been above it. Can we get some strength and go up above it, or are we going to break down below it? Here's the Fibonacci retracements, also showing that we're just a little bit below the 61.8 and 38.2 retracement, which seems to be pretty significant support now. And if we really do end up breaking below that, and we did close below this by about 10 points, if we cannot get back above that, that could be pretty negative. Here's the weekly chart showing that we're also starting to break down below this 38.2% retracement. The sectors, the ones that were down the most, energy, tech, and healthcare, were all down over 1%. And we didn't have any of the sectors that ended up being up. The scooter rating is just showing that utilities, energy, healthcare, and staples are still registering in the 90s. And then we have discretionary and communication, which are 12 and 11 respectively. Here's our sectors showing that energy is still positive, with utilities slightly positive, with all of the rest of the sectors being negative since the all-time high. Here's looking at the different indexes, showing the Dow holding up the best, and you have the NASDAQ 100 and the NASDAQ doing the worst. As far as our technical alerts, kind of both ways, the euro set a four-year low. The NASDAQ was above 11.4, then it went down below 11.3. Nothing really for the S&P that was triggered. We got down close to 3,800, but we didn't breach that level. Intraday, I don't have the futures chart this time, where we kind of had a little bit of a positive open. We spiked up a little bit. That ended up setting the high for the day. We dropped down negative all the way down to S1. We bounced back up to the pivot, came back down to the unchanged level, went back up to the pivot again, came down to the unchanged level. I mean, my goodness. And then really it was near the end of the day when we saw things really start to drop below S1, below S2, almost down to 3,800, and then a little bit of a bounce going into the close. Our trend is still below 20 at 19.4, but it's negative because the red line continues to be on top. Breadth is showing a decrease in price and volume, as is the advanced decline ratio. The new highs, new lows, they're starting to roll over now. So that was what we were kind of hanging on to. Not happening right now. Accumulation distribution is still positive, but we're really turning down right now. We are below the exponential moving average, but we're still using the simple moving average as possible support for the 20 period. And here's our tree right here. Moving average rainbow starting to show prices coming back down, potentially out of the rainbow, unless we see some kind of a rebound. Stochc RSI wearing off that extreme positive reading, as is the Williams percent R. The force index has actually dropped a little bit below zero now, so it's slightly negative. Swinland trading oscillator has also dropped below zero on price and volume, and it is still headed down. So that's more negative. McClellan oscillator also below zero. 20, 50, and 200 period moving averages are also declining. That's negative. Stochc RSI declining in the short term. No, I'm sorry, stochastic declining in the short term, intermediate term, and still holding up in the long term, but another day or two like this, and this could roll over as well. Intermediate term, we're now below this anchored moving average, going back to the COVID low. That's a little more negative currently. The PMO is still positive, but starting to roll over based on price and volume. Those PMOs that are rising continues to decline after giving an extreme positive reading. We're pretty much flat with the buy signals, and we're still advancing with those PMOs above zero. The Chaikin oscillator has now turned down. Chaikin money flow, believe it or not, is actually showing an improvement. Volume, even though it picked up a little bit, we're still really going down overall. And the vortex, we're still positive here, but the buying power is decreasing and the selling power is increasing. Summation index starting to roll over based on price and volume. Our oscillators are still positive, but some of our shorter term ones like the TSI and possibly the MACD, they're starting to roll over. And another day or two of this, and they could switch over negative. The BPI, this is probably one of the more positive things I saw. where we actually had a bit of an uptick here and we're not really decreasing. Ease of movement is now turning down. Ultimate oscillator also turning down. TTM squeeze, it's still showing some improvement too. This is more of momentum. I'm not sure where it's getting the momentum from, but it's still looking a little more positive. We're looking more negative with the Heiken Ashi with a black bar. The Kegi is still positive, hasn't turned red yet, and the Renko is still positive. The 3-line break is still positive. So we haven't seen enough of a price move yet for a lot of these charts to redraw. The Elder Impulse for the SPX is now switched back to negative, as is for the SPY. The SAR continues to be positive, but it can really show some big drawdowns before it changes. Our go, no go system is now switched back to a deep purple. Long term, seeing a decline with the 50, 150, and 200 period moving averages. Special case still trying to roll over positive, but it could give that up anytime. The Dow, we're dropping below the pivot. Now, the diamonds have switched back to negative. The Qs have switched back to negative. The NASDAQ 100 has also dropped below the pivot. The Vixen is not really spiking up, but it is advancing with the downward movement in price. NASDAQ also dropping below the pivot. The Wilshire below the pivot. So a lot of things not looking good, except for the dollar. It continues to go up. My goodness. Euro is really going down. The dollar is really going up. And here just shows the yen really showing some weakness. And here's the euro in the middle and the dollar on the bottom. And we're not really seeing anything helpful right now with the SPX and the dollar, where they're kind of moving in the same direction right now. Oil really dropped. It was down almost 8% to 95.84. And the correlation between the two is still pretty much neutral between oil and the S&P. Gold continues to really struggle. Silver struggling even a little bit more. Bonds, and they bounced up about 0.5%, but still showing some real weakness overall. The correlation between the S&P and the 10-year yield is pretty much neutral, as is the tech sector to the 10-year yield. It's going back into neutral territory. We still have the two curves, the 10 to the 5 and the 10 to the 2, which are inverted right now. And I wanted to show this. This is the one that's really been holding up and what some other folks use as their main indicator for being inverted or not. This is the 10 to the 3 month. And yeah, we're still positive, but look at how it's really been dropping off lately. The 30-year yield is just hanging right around 3.13%. And treasury yields, they actually declined, except the shorter term is advancing. Our scenarios, okay, well, with this look of bouncing up after giving an extreme negative reading, it's still hanging in there with this indicator. The 10-day moving average of highs and lows, it's came back up a little bit and it's starting to drop, but that it's still considered a valid signal. The percent of stocks above their 200-day moving average, it's also holding up currently. Then S&P stocks above their 50, it came up, but it's starting to come back down now, as it is with the mid caps and the small caps. But we're still working off of a signal with these charts, or I should say a setup with these charts. The VIX also, we have a setup here, but we really need to see the VIX continue to fall. That means when prices go up, that's when that happens. The Copic curve is still generating a signal, even though it's starting to roll over slightly. The praying bottom fisher, that signal is still hanging in there. And here's our sector rotation. We're still positive with the Qs, discretionary and growth, but we are seeing some weakness in these charts. And with the growth versus value with the large caps, mid caps, and small caps, we're also seeing some weakness, but they continue to be above this moving average. Then the spike, well, the 2-year is starting to come back up now. It was down a lot further yesterday, but this is still a spike right here, but with it being so close, it's even more difficult to tell. And the correlation between the S&P and the 2-year yield, it's starting to come back down after they were moving in the same direction. And then the staples, just want to keep an eye on this. We are seeing a potential death cross very soon. And the spike is coming back up now. So we don't know if this spike here is going to be taken out or not. So what's our outlook then? The technicals, they're turning back negative. And sentiment is negative and almost extreme again. We have the CPI coming out. That's the biggie. That's what everybody is waiting for. And of course, all the geopolitical events. If you watch these videos very often, just pause this and look through that list. I haven't changed it at all, but I hate to read things off when I'm doing the lessons. So how can we go down from here? All those reasons that I just didn't say, but listed. And the technicals, they're turning back negative. So that could help things go a lot further down. Are we turning back positive? Well, not really. It's just not happening, at least right now. Now, everything could change after this report comes out. And these possible positive scenarios, they're still holding up. We're still having setups from them, as well as the sector rotation, but we're not seeing any follow through right now. Our technicals are just not looking very positive, other than we're still above that 20-period moving average. All the other things are still kind of shifting back more to negative, and we are neutral now because the ADX is below 20, but it is negative with the red line on top. So our conclusion, the S&P is turning back negative, short-term negative, intermediate-term negative, long-term negative. You can't really conclude anything else unless we see some kind of a rebound. So thank you. Have a very, very good Wednesday. I will look at preparing a video definitely for, unless something happens that prevents me from doing that, for Thursday's session. So have a wonderful day.